Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
My name is Rob Clayton and thank you for joining me. The Australian dollar rebounded after the US inflation came in softer than expected, easing pressure on the Federal Reserve to raise interest rates in the near term. Headline CPI fell 0.4% in June compared with expectations for a 0.1% decline, while annual demand slowed to 3.5% from 4.2%. Core CPI on the month was 0% from 0.2%, while annual inflation slowed to 2.6% from 2.9%, which reduced demand for the US dollar, sending it from 101.30 to 100.75 as I speak. Fed Chair, though, Kevin Walsh, welcomed the softer inflation report, but cautioned that the month's data does not signal victory over inflation, leaving markets focused now on Thursday's US PPI report for further confirmation that price pressures are easing. Turning to the technicals, though, although we have cleared that 69.65 level, there is still resistance at the top side around 70 cents. And keep an eye on there because that's where the market rejected and is a key point. Unless we get a break above 70.15, which would inject a rally onto 70.60 to 71 cents, a rejection could be seen as the RSI is weak and the MACD is slightly improving, so a rejection could take it back to the lows of 69 cents. Turning to the euro, well, the market is still contained by that top side of 115 figure 15, and while is intact, could still see pressure to the downside. As Kevin Walsh did mention, it may be a one-off, and then he is staying with data dependent, so we do need to see a little bit more. Maybe the PPI could give us a little bit more confirmation, but presently though, unless we get a break above 115 figure 15, then the return to supply may see the move back to 113.5. Dollar yen, well, I still feel there is a more potential downside as the RSI is still lacking and the MACD is still negative, and therefore could see a move eventually through 161.80 and down to 160 as a potential target, and where I've outlined here. Unless we get a break above 162.60.85, the bears are still in control. Sterling, well, the market was very whipsawed and very hesitant towards its top side where it's recently seen around 134.5. And given that the fact the market is still a little bit nervous to that top side, we may see that cap holding and therefore eventually see a pullback towards 133 and reassess. Commodities, the market is still contained by this trend line, which is somewhere around the region of 4,100. I would like to see a clear break above there, and if so, should ignite a 250-point rally. Presently, though, is contained, and I still look towards this region of 3,950 and reassess. Oil, for the market still marching higher, still has potential to maybe gain on towards the $81 to $82 mark, given the fact that technicals are a little bit firm, but keep an eye on this RSI, a bit of divergence, so if we do fail to break above $80 a barrel, then we may see a pullback to around 76. That's a wrap. Thank you for joining me, and as always, look out for the interest report. I hope you have a great start to the day.